Hey everyone, welcome back to Nadlan Forum Podcast Daily. I'm Ruby Sturt, hoping you're having a decent day and, well, ready to dive into the maze of mortgages. Lior's here too. Ready for this one?
Of course I am. Mortgage maze is like my favorite kind of maze, especially when we're talking about helping people crack it. Okay, so today, mortgages for first-time, low-income buyers. That's a topic we get questions about all the time, right?
Totally. I mean, I remember back in uni, the idea of saving for a deposit while paying bills just felt impossible. But there are programs out there actually designed for people in exactly that spot. So let's start with FHA Loans. I think a lot of folks hear FHA thrown around but don't really know what that means.
Yeah, so FHA loans, they're basically government-backed and meant for people who might not have, perfect credit. You can get in with a credit score as low as 580 and only 3.5% down. If your score is even lower, say 500 to 579, you're not out completely. You just need to put 10% down. Not too bad if you're planning ahead, right?
Exactly. Plus, you can even use gift funds for your down payment, like your parents or your super generous mate can help you out. But FHA loans do require mortgage insurance, which bumps up your monthly payment a bit. Still, it's what gets a lot of people through the door.
And on the topic of getting through the door, if you've served in the military, you've got to look at VA loans. Friendliest terms ever. You can buy with zero down and there's no mortgage insurance, just gone. Plus, the rates are usually better than conventional, so the long-term savings are serious. Only catch is you need to meet the service requirements and have your certificate of eligibility, but your lender can usually help sort that out.
I still think USDA loans are the most slept-on option. Like, if you're house hunting in a rural patch or even some suburbs, you might get 100% financing, no down payment. But you have to buy in a USDA eligible area, which I always forget is not just like in the middle of the outback, right, Lior?
Yeah, not just farmlands and cows. Some suburbs, totally eligible. I remember working with this couple upstate. Absolutely certain there's no way they'd qualify. Then we pulled up the USDA map and boom, their whole town was green. They got in for zero down. People just don't realize that they might fit the criteria until they check. If you're not sure, ask your lender. They can double check the property for you. The income limits on these loans are also, I'd say, more flexible than people think, especially for families. And monthly costs are lower too, since the mortgage insurance is cheaper than FHA.
Absolutely. Okay, quick recap. FHA, lenient credit, low down payment, but watch the insurance. VA, if you qualify, it's a no-brainer. And USDA, worth the map check, especially if you're not in a major city. All right, let's shift gears to something I know a lot of folks get overwhelmed by, the whole financial prep part. So, prepping your finances, kind of scary at first, right? Like, you look at your credit score and just want to crawl under a doona. But honestly, making a plan helps. Small stuff, like automating your bills, lifesaver for me in uni. I started using a budget app and kept forgetting less. My score went up just from being, a bit less useless about deadlines.
You're not alone, Ruby. I see so many buyers get intimidated by that credit number. The basics, paying all your bills on time, keeping balances low on cards, holding on to old accounts, they make a real difference. And always check your credit report for mistakes. Even one error, like a payment marked late that wasn't, can drag you down. If you do spot an error, dispute it fast with the credit bureau. Sometimes it takes a month or two to clear up, but the impact can be big.
Yeah, and the fastest way to freak out is seeing your debt total. I think a lot of folks just freeze. What helps, honestly, is tracking literally every expense, even the silly ones. It gives you back a bit of control. Then you can see where to cut back and save. Did I ever tell you my ramen diet phase? Not glamorous, but that extra cash went to paying off my high-interest card first instead of random takeout. Worked for me. Priority, smash the debts with the grosser interest rates first.
Sometimes consolidating debts is smart too. Roll a few high-interest cards into a single lower payment plan. Just gotta make sure you're not moving the problem around and then racking up more. And steer clear of taking on new loans or credit cards while you're prepping for a mortgage. Your score will thank you, and so will your wallet.
So, sum up. Automate, track, attack the ugliest debts first, maybe consolidate, but don't spend on stuff you don't need, especially when you're so close to getting those mortgage keys. But after the financial boot camp, there's one last piece, finding help that's actually out there for first-timers. Right, let's talk about the rescue squads, down payment assistance and all those programs. Every city's different, but there are grants that don't need to be paid back and low-interest loans to help with your first down payment or even closing costs. I know some places even help you cover nearly everything if you qualify.
Absolutely. For example, in New York and other big metros, there are DPA programs that'll kick in a grant or a cheap second mortgage. I had this client who didn't think he'd make it. Then he hit up a first-time buyer workshop. Those workshops are gold, by the way, and often run by non-profits or local agencies. After the session, he learned about a state grant that ended up covering the entire closing cost. He was out less cash at closing than he'd expected, just because he showed up to that class.
So worth looking up what's out there, right? And don't forget mortgage credit certificates, or MCCs. They're a tax credit you can claim for part of your mortgage interest every year. It's not huge for everyone, but sometimes it makes the difference, especially when you're tight on cash after moving in. You just have to ask your lender or a tax pro what's available for your area.
And HUD approved housing counselors. They're underrated. Free or super low cost, and they're not trying to sell you anything. They just walk you through the process from budgeting right through to closing. Most states list resources online, or you just ask your lender for a connection. And those educational workshops, sometimes you even need them to qualify for the assistance in the first place. It's a bit of a loop, but a good one, you know?
All right, so if you're listening and feeling like the deck is stacked against you, promise it's not. There's a program or resource out there with your name on it. Keep digging, reach out for help, and keep working on your financial health along the way.
Homeownership is hard work, not magic. But there are tools and people and literally government money sometimes just to give you a hand with that first step. Use them.
Couldn't agree more. All right, that's it for today. Awesome chat, Lior. We'll be back with more answers and stories next time on Nadlan Forum Podcast Daily. Catch you then.
Thank you, Ruby. Goodbye, everyone, and good luck on your home buying journey.